this is Rick on the results of the Canadian core retail sales. I'm going to show you the trade on the charts itself, and then I'm going to spend a little bit of time explaining the whys and what's behind the trade. And I'm also going to show you my transaction log. I did enter this trade, and I did have a win on it. It was a tough trade, but it worked out in the end. At the end, I was not trading the Canadian core retail sales, and it had hung overnight for me. I let it run, and I was actually at that point trading on the Canadian interest rate statement. It's not a great way to trade any release. You want to be in and out of these trades hopefully within a short period of time. But if you're of the mentality where you can set it and walk away and come back and take a look at it and then manage that trade, sometimes that can be to your benefit. You don't get involved in it psychologically. So, and that's exactly what happened on this trade. So what I had done on this trade is, based on the parameters and based on the trade plan, was a buy of the US CAD, and I'll explain why I picked the US CAD over the Euro CAD as well. So let's just follow this trade out. Talk about stops here real quick. In this particular case, looking back, we see that we have a support area around this 99083. When I'm looking at a chart like this and I'm determining, first off, what am I going to be entering from a lot size? What is the maximum I can risk? So on a $10,000 account, the most I would risk is 2%, which would be $200. And if I wanted to look at this and say, you know what, I want to set my stop at just below 9900, because psychologically it's a great place to be. I mean, here we are at 9907, 9908, and if it drops much below that, is it going to drop below the 9900? And if it does, I'm out of the trade at 40 pips or 35 or 40 pips, depending on where I entered. So I went in this with 5 mini lots, knowing that at $5 a pip, 40 pips is $200. That's a 2% loss on a 10% account, on a $10,000 account. So let's follow this straight through. And remember where the stop is, and I'll show you the transaction on it. Unfortunately, it doesn't keep a record of transaction that I canceled, which was when I canceled the stop after the take profit had been hit. So here was a trade. I entered it on a buy as it came down and then crossed back above. I actually entered it late. I entered it at 4.0. I had my head down. I was working on something else, and I did want to enter this trade because it's such an interesting trade. And it's a good educational tool for all of us. So follow this trade out, and again, I had already set my stop, and you're going to see it show up here as we move through. You see the purple line on the bottom, and there's my stop. It's now around this time. It's midnight. I'm sleeping. This trade is running, and I really hadn't given much thought. I'm not, emotionally involved in this trade at this point. I was busy doing a lot of things during the day, and it really even wasn't on my mind at night where it sat. And I knew that it was relatively close to my stop, but if it got hit overnight, it got hit. If not, and it hit my take profit, I'm in good shape. So I woke up in the morning and walked into my office. Now this is Eastern time here. I'm sitting in Central time, so this is actually 6:30 in the morning for me here. It says 7:30 in Eastern time. So I enter my office and I look at this, and I'm at not a bad place. I'm at 1617, drop back down to 1415. Noticed I had gotten pretty close to being stopped out on this trade, but it hadn't happened. So what did I do? Well, when I got here, I said, you know what? I know that the Canadian interest rate is coming out very soon. So, and I'm sitting in this area, this 991617 area, knowing that's coming out. So I brought my stop up to 12, right there. And why did I do that? Well, knowing that the Canadian interest rate sales are coming, or not interest rate, the interest rate release, the Bank of Canada is going to make its interest rate statement at 10 a.m. Eastern Standard Time. I knew that if this moved, it was going to move strong in one direction, either for me or against me. And why go ahead and set up and take a 40 pip loss when I can hit a 28 pip loss? I want to preserve my capital. We tend to look at our trades only from a profit standpoint. We never not never, but we rarely look at our trades about reducing our loss. We look at maximizing our gain, but never minimizing our loss. And I like to trade. I like to look at what can I do if I'm in a trade from a management standpoint to minimize my loss. And if something's going to happen to go against me, do I want to lose 25 pips or do I want to lose 40 pips? The answer is pretty obvious. The news report came out on the interest rate, which was no news at all. Bank of Canada had made some announcements that were a little bit negative for the Canadian dollar, so naturally the US CAD screamed up. I had my take profit before I'd gone to sleep at 9960, which is at this mark here. It's gone off of this chart, but it was a 20 pip gain for me. I had entered at 9940, got out at 9960, 20 pips. Let's take a look at my transaction chart on this so you can see where I entered, where my exit was hit, and what had happened overnight on the mark-to-market swap rate transaction that my broker does. So here's a picture of my transaction record for that trade on January 22nd. Notice the time is GMT 1:37. I'm in Central Time USA, so that is not the time that the trade took place Eastern Standard Time in the US. It's much closer to the time what they released on the 22nd at 8:30 a.m. Currency pair was US CAD that I traded. You'll see the buy, the amount. Again, I traded 5 mini lots on this. Here's where I entered 99400. The counter currency amount, which would be the Canadian dollar. And that's it on that transaction. You'll note here at 10:28 GMT, you'll see a dual transaction, a quick sell and a quick buy. This is when my broker settles the mark-to-market overnight. You'll see it immediately settled at 105 debit loss on my account. It's really not for anything for me to be concerned about, except that whatever the swap rate is and how that affects my my capital and my gain as it relates to a long-term trade, especially when I trade overnight. If it's major, this was not major. Again, and here's my exit on the 23rd. Again, I stayed in this trade, and this was at roughly right at 10. As it zoomed up at 10 a.m. Eastern Standard Time, 5 hours 38 seconds. It came up, hit my take profit, and it was a credit to my account, $203.04, and my net on this was $97.96. I'm going to go back now and tell you why I picked the US CAD over the Euro CAD. If you want to get into the detail as to why it was a buy, I recommend you go back and look at the recording of the trade plan that is posted up on the site for all of the clients to look at. It is a long video for the trade plan. It's roughly 35 minutes or longer. It's one of the more complex trade plans, but it's been successful. But a tight trade, especially when you talk about the stop and where I had set my stop, there was a lot of risk involved from a pip standpoint, but not over my risk as it related to my capital management, my account management plan, that I will never risk more than 2% on any one trade. So I was satisfied with this trade. Yeah, my profit, I would have rather had a 40 pip, and I moved my take profit up, I would have been in a much better position, but my head was down. I was working on some other things, and this trade happened to be a 20 pip winner for me. What I want to do on this particular results video of the Canadian core retail sales, I want to talk to you a little bit about what I had done and what my prep work is prior to entering a trade. Sorry the screen jumped on you here, but every time the price changes it's going to jump. So I'll see if I can do this in less than 5 minutes. And we go back to the 22nd at the time of release. And what I'm looking at prior to the release at 8:30 a.m. Eastern Standard Time on the Canadian core retail sales is I'm looking at which pair am I going to trade. I'm making a decision, and the trade plan tells us we should be looking at the USD CAD or the Euro CAD. Now, of course, you can also be looking at any pair that contains the Canadian dollar, the CAD Yen, the Aussie Canadian, anything that you want to look at. Research has shown me that the two pair that react the most on this are the Euro USD, the USD CAD, and then the CAD yen. So I'm looking at this and I'm saying, well, which pair am I going to trade depending on the direction of the trade? And why do I say the direction of the trade? Well, if I look at prior to the release here at 8:30, from 5:30, 5 o'clock in the morning, 6 o'clock in the morning, 2.5 hours prior to the release, I'm noting that the euro is losing strength against the US dollar, meaning the US dollar is getting stronger or the euro is getting weaker, one of the two. We go look at some other charts and I can pretty much determine what is going on in this particular case, and it's really that the euro is showing a little bit of weakness and the dollar is showing a little bit of strength, so it's pretty much even off on this. But what I'm looking at on here is what pair would I trade when it comes time to pull the trigger. So looking at this, if the euro USD is dropping, meaning the euro is losing strength and the dollar is gaining strength, when it comes time for the transaction, if the transaction and trade plan indicates a sell to me, I'm going to sell the euro CAD because the euro is losing strength. On the other hand, if the trade indicates a buy, meaning I'm going to sell the CAD, I'm going to buy the USD CAD because the USD is showing strength. So depending on the direction of the trade, will determine which pair I have decided to trade. It's my viewpoint. That's how I look at it. Somebody else can give you a different way to look at it. There's some currency strength meters out there. But I look at it on a rather short-term basis. Not to say that it's any better or worse than anything else. It's what I do when I'm trading. So on a short-term basis, I'm looking at what is occurring with the pairs that I'm going to be looking at and the counter pairs that I'll be looking at. Again, here we have the Euro USD, but that's not part of the trade. The trade is based on the Euro CAD and the USD CAD. What I wanted to look at here was the actual release data when it came out on Tuesday morning, the 22nd. Here we have the Canadian core retail sales. And again, the trade plan is based on the core retail sales, but I learned something during this release, and I'll show you exactly what it is. Here we have a negative deviation. It missed the forecast by 0.2%, which tells us that based on the trade plan, the Canadian dollar should have weakened based on this result. Not only that, we notice the revised, if I hover my cursor over it, it's revised down from 0.5%, and here the month-to-month retail sales revised down 0.2%, down from 0.7%. So looking at this, I'm saying, well, gee, that is rather negative for the Canadian core retail sales. So, but let's take a look at the actual news release as it came out. And this gave me a little bit of concern as I looked at it. And open this up, January 22nd, 2013, and this goes back, once they gathered the data, this goes back for November 2012 sales. And we note here, very interesting, retail sales edged up 0.2% to 39.4 billion in November, fifth consecutive monthly sales gain. So what they're looking at here is the continued sales, consecutive sales, showing that retail sales over the last 5 months have gained. Now, so that month to month on the core retail sales, even though they are down, the results that came out in the sentiment, higher sales at motor vehicle and parts dealers, which are excluded from core. We had new car dealers plus 1.6% led the increase, rising for a 6 straight months. So car sales are on the gain in Canada. Now, again, this trade plan was based on the core retail, and that's the trade plan that I followed. What this tells me is I need to be concerned about what the Canadian retail sales number is now focusing on, is we're seeing this consecutive monthly gain, that is what is going to drive the reaction of the Canadian dollar. So something we're going to be aware of and watch. So you've seen the trade already in the first part of this video, but I just wanted to bring this up. These are the things that I'm looking at when I'm trading. Again, I looked at the Euro USD and what pair would I trade. I look at the trade, the release results. What not only do the release results say, but what is behind them? What are people focusing on? What is the market focusing on? And how do we react to that as we go forward?